Good morning, everybody. It's Christian from Discussion with the 4 majors and that's update for the 5th of December 2013. Okay, guys, Thursday today. A lot of news out for today, for particularly sterling for UK market, and then we have the euro interest rates announcements around about 12 noon this afternoon, followed by a lot of data this afternoon for the US market. We have prelim quarter GDP figures, very important. They're expecting an expansion there of almost a 1.2% increase. Then we have unemployment claims for the US market, followed by the factory order month-on-month figures, but also have Canadian news out, the RV PMI results in between all that. Very important. We also have sterling's official bank rate, MPC rate statement, all within today's analysis, and that's all coming out prior to non-farm payroll tomorrow. So if you are looking to trade, I would seriously think about standing aside or looking to trade any crosses that don't have those pairs or those currencies as a cross pair. Looking at the euro against US dollar on the daily, you can quite clearly see that the sentiment still favors the upside. The indicator box is still very much positive. You can still see we've made swing highs recently. We had a bearish engulfing candle, however the Tuesday candle engulfing the prior negative candle, and then we saw yesterday price hugging the upside. Almost this can either represent two things over here. It can either represent a hangman in terms of where price is trading at the price support and resistance level, fib level here at 23.6. It's still indecisive, but there's still more buying contracts at this, but we still want to see a clear confirmation candle, and we're seeing on the Asian session this morning a very bullish engulfing candle indeed on the euro. But what it needs to do is it still needs to close bullish engulfing today. So I mentioned here a week ago, daily chart must see bullish close above the 23.6 fib. You can see the candlesticks before that, very indecisive. So very important. If this is to be a true positive candle, i.e. a hammer, or we do need to see a bullish engulfing candle. If it's to be a negative candle setup, i.e. a hangman, then we need to see a bearish engulfing candle similar to what we saw a couple of days ago at this level. So decisions. We have a lot of interest. We have a lot of news out today for sterling. It's up to you if you want to actually trade it or not. But as it stands now at the moment, yesterday was a clear indecisive daily candle, so you would have to wait for a decisive daily candle today in order to give you a true confirmation. If you look at the setup, everything's still looking positive. We have our blue arrow, blue candles, all the moving averages below price, which is important. We are spending more time above the 23.6 weekly fib, which is also important. RMO is still above the zero level, OSMO above, and the last couple of days, in fact, we've seen consolidation, i.e. contraction, dark green, which is not a positive signal. It's not a buy signal, if anything. So if you are looking to trade a daily time frame, you would have to wait for this close. It has to be bullish to give you a true signal. Once we get that, we'll clearly be breaking above the prior support and resistance level, weekly high, but we'll also be finding support now above the 23.6 level, which we didn't do when we had the breakout a week ago, and then we could target the 61.8 monthly fib, which happens to be our October 2013 highs, which is a healthy 218 pips and change away. So just be vigilant. There again is entirely a choice. We have we have the minimum bid interest rates announcement. We did see a change the prior month from 0.5 to 0.25. Sorry, so we saw a 0.25 drop by Draghi and his sidekicks. Are we going to see the same? Remains to be seen. They don't expect any changes, but you can guarantee there's going to be speculation before and after that news announcement. Moving on to sterling, we have a lot of news out for sterling today. We have the autumn forecast statement. We have assets purchasing facilities. We have the interest rates announcement, followed by the MPC rate statement. There's a lot of news out for sterling today, and you can see on the daily here a lot of indecision recently as we've headed into the monthly fib. A lot of shooting star formations, candles at resistance, indecision, followed by a shooting star, followed by a further shooting star, but engulfing. Yesterday's candle, similar to the European one in terms of the actual formation, a lot of body at the top, still indecisive, still at the resistance level here, so this could particularly be a hangman. The only thing that's going to cancel these candlesticks over here is a bullish engulfing candle, and I'm still waiting for that bullish engulfing candle to form. Once we get it, I'm hoping it'll close above the monthly fib at the 38.2. That will then allow me to then tap into longer term support and resistance levels, and I can then work out what my likely target is to be. The first one being the current dotted line above me, which is a healthy 305 pips away. So Got to wait for a defined candle. These candlesticks that we've seen over the past 4 days or so, all indecisive. They all mean something to a degree. These two in particular here are negative. This one here is also a negative candle if there's a major support and resistance level, which it clearly is, and the only thing that's going to cancel these candlesticks over here is a bullish engulfing candle. So you would have to wait for a bullish engulfing candle close on the daily to give you a more directive outcome. Still, the actual indicator box is still telling us to look for buying opportunities, but we have a solid fib level here above price. You can quite clearly see we've had 1, 2, 3, 4, 5 consecutive days of resistance. Failure to move any higher, that's consolidation. So we need to see a break. And we're going to see a break. It's going to have to be in a daily, a nice break above close, bullish engulfing candle. RMO is still looking long. The RSMO is above, but you can clearly see over the consolidation we've seen dark green, which is telling us not to buy into it. The RSI is above, which is good, and still above 50, which is fantastic. So the only thing they're missing over here is a confirmation candle. US dollar Swiss franc, and we're seeing the opposite. If the euro US dollar is positive, then we need to see the US dollar Swiss franc negative. You can quite clearly see a lot of negativity in the R squared is complementing a lot of that selling. So great. Should be looking for lower lows on this particular pair. Price has been swinging low. You can quite clearly see on the daily here we are looking for lower lows. We have our red arrow, red candles. All the moving averages are above price and order. RMO is below the zero level, OSMO below, and bright red, and RSI below. So we should be looking for nothing more than selling opportunities, and our next potential target would be roughly around here at the 89175 mark for the foreseeable future. US dollar Japanese yen. Here, as you can quite clearly see, we had a wedge formation that started back in April of this year, and something what we've been doing for the past 6 or 7 months is trading within this wedge. And then what we wanted to see was either break lower or break higher. So we got the break higher, which is good because the long-term sentiment was still favoring the upside. You can quite clearly see here on the hard left edge is my monthly, weekly, daily, and that's going to dictate my long-term trend, and that was pretty much to the upside. However, as we went into the consolidator range, we had a lot of mixed signals throughout the last 5 or 6 months. And what's happened recently, we had a beautiful break out of that, and then we had to get above the price swing low, which was this major one over here, which also meant be trading above the monthly fib, which is also a fantastic signal for positiveness. We got that, and then all we've seen since then is higher highs. We are now we've broken through the prior swing, which was here, and now as we've headed higher into this level, you can quite clearly see the price has actually faltered, because this being our long-term support and resistance level high, which is our April highs for this year, in fact. So a lot of indecision has crept in here. We have had a bearish engulfing candle after the positive, now indecision yesterday, and you can see if we have bearish engulfing here at a price support and resistance level, then we should be looking low again, and the first port of call is going to be our price support and resistance level, which is where it's moving to now, which will be our 20 period moving average, which is still a healthy 44 pips away. You can see that we have blue arrow, blue candles, RMO still above, the OSMO has been above the zero level, but on today's candle you can quite clearly see it's starting to move lower. RSI is still above, but had clearly come from a very overbought scenario, now back moving lower again. So you can see the indecision intraday complementing that. So we are looking for selling. So the long-term sentiment's up, swing highs, there we go on the daily, you can quite clearly see swing high, swing high, swing high, and then the indecision candle yesterday on that. Now you can see today's candle piercing that, but if we to see a true change in market sentiment long term, i.e. a change in trend direction, then we need to break below the price swing low here, which will then also see price trading below the price support and resistance level high that we had back in, let's have a look over here, back in June of this year. And that would be negative, because then it'll tell us we should be looking back towards a prior support and resistance level, which is the shape of the 50% fib retracement, which happened to be the price support and resistance level high that we saw in early September. So very, very important. We have non-farm payroll tomorrow. We also have a lot of news out this afternoon. Is the US dollar going to give us a sentiment candle? Indecision candle yesterday, we want to see a decisiveness. Decisive candle would have to break below here to be true negative for the foreseeable future. If she finds support here, then we could see consolidation with a reattempt of the prior highs we've just come from. Other scenario would be a bullish engulfing candle as the US news comes out favorably, and then we could head towards those 103.59 mark, or the price support and resistance level highs, because the long-term sentiment is still favoring the upside. That's it, guys. Short and sweet, to the point. Please, guys, be aware, Thursday and Friday there's a lot of news. Today important because we have interest rates announcements for Euro, and we also have interest rates announcements for the UK market. Good old sterling. After that, we'll also have a lot of news out for the US market. We have prelim, quarter, GDP quarter-on-quarter figures, which is so important. We have the previous figure was 2.8%. They're expecting 3%. So there's a noticeable difference there. And we've come from negative figures in the past. The same time, back in, what are we looking at now? Let's have a look. The same time, November of 2012, we were 2.7%, and they're expecting 3%, so we'll be a lot higher this time last year. Very good. So if it does come out like that, expect the US dollar to really gain momentum on that, and you could expect all the cross pairs against the US dollar to fade. Okay, so look where price is trading on those particular pairs, your euro, sterling, and see if you can actually capitalize from that. Otherwise, if you are trading this particular template, please back it up with sound money management rules. Very important, and keep it as simple as possible, guys. So important. We had trade balance figures out last night for the Australian dollar, which is an important one. Just want to bring it to your attention. The previous figure was a negative 0.27 billion. The forecast was for a worse figure of negative 0.38. So a sizable difference there of 0.11 billion. And the actual came out even higher than that, at negative 0.53 billion. And if you look at the Australian dollar, we have had no change in the actual outlook. So things are probably more likely factored into price on that news announcement. Also, other deciding factors would have been play. You can see here on the Australian dollar, long-term sentiment still favors further lows. However, intraday sentiment still favors buying sentiment, but you can see that the R squared isn't complementing any of that buying. You can see here on the 4-hour candle, a lot of indecision candles. Still trading below the monthly fib as well as the weekly fib. All our moving averages below, above price, so that's resistance. RMO below, RSMO below, the RSI is still below the 50. So still look for negative opportunities to trade. We just need to see further confirmation or bearish engulfing candle low, and then we could target the weekly fib, which is a healthy 200 pips away and change from where we are trading right now. That's it, guys. I'm going to leave you with that. Hope you have a fantastic trading day if you are deciding to trade, and I will catch you guys first thing tomorrow morning. Until then, you guys trade serenely.